understand what actually makes a token valuable? Well, today we're going to discuss how assets are categorized and why this even matters. Token classification is one of the most important aspects of investing because that classification of whether a token is equity, security, or debt really determines how it's regulated and traded. So the first bit we're going to look into today is what makes up an equity token. So an equity token really functions like a traditional stock asset. It represents ownership of some third-party asset or venture and really takes its value from that success or failure of the venture itself. If we look at the real-world comparison here, we're looking at stocks, futures, options contracts, and in terms of why an individual might want to own this, really it's quite similar to a traditional stock with the only difference in the method of recording this ownership. A traditional stock is logged into a database and can be accompanied by a paper certificate, whereas an equity token really records corporate ownership on the blockchain itself. And in turn, that benefit from the success of the company is what would be recorded. In terms of regulatory status, this is treated as a standard securities transaction by the SEC.
Right, so now moving right along to security tokens, the big difference between them and equity tokens is the fact that security tokens do not create a stake in a company. Repeat, do not create stake in that company. So the best way to kind of describe what a security token is really talking about real world examples. So there are many ICO projects out there that will distribute their security tokens in their ICO, and the owners of these tokens will receive some sort of profit share, whether quarterly, yearly, monthly, what have you. They'll receive profit share from the company for owning those security tokens, and their profit share will be anywhere from a little to a ton based on the amount of security tokens that they own. So the better the company does, the better the platform does, the more people that join the platform, the more fees that are collected, the better you do. So this is more staking your value on the company's performance versus its long-term value as a company potentially getting listed or getting on exchange. This is more about the company's performance. Now, the reason that you might want to own this is because maybe you think this company is going to do very well in the beginning, have a really good start, make a lot of money. You'll get on the receiving end of that profit share, those dividends, and you'll be very, very happy. Or maybe you think the company just has a solid game plan and it's a platform that's going to attract a lot of users, which will drive the profit up. Whatever the case may be, it's definitely an awesome way to get involved in the blockchain community. And there's some important things to remember, though, that this is subject to all oversight and regulation of the SEC. Although they define it as not a stake in the company, it is still watched by the SEC. So you do have to report the capital gains that you make off of profit sharing or whatever the case may be with the specific security token. But just make sure that you keep that in mind. The SEC is always watching.
And the last token type we're going to evaluate today are the debt tokens. And essentially this represents outstanding debt and liabilities. They get their value from the debt, its interest, and the credit worthiness of the debtor party. In terms of real world comparison, we're looking at bonds, mortgages. And in terms of why someone might want to own this, it's essentially a tokenized liability. So it's like the blockchain's version of an IOU. And debt tokens are likely to be leveraged by individuals currently working in crypto who need access to a line of credit or might want to borrow or lend for speculative purposes. So these actually have contractual repayment guarantees that are enforced by both legal and smart contracts. In terms of regulatory status, this is treated as a standard debt security transaction by the SEC.
And so that's everything that we have for you guys today. This has been Debt, Security, and Equity Tokens. Thank you for listening. We hope you learned a lot. Please visit us at bitcoinmarketjournal.com. And as always, we wish you health, wealth, and happiness.